Good morning. Welcome to Talking Bull, episode 495, 595. Can't keep track, but it's up there. Again, I'm on my own today. London seemed to gobble the guys up and spit them out. They're back up there again today, and yeah, hope to come back with some good info, good stuff from them guys. Welcome. I'll run through the headlines, then dive into the charts. Drop me a note if you want me to cover any markets that I haven't covered, and we'll see if we can get you the technical analysis base that you need to kick on and tackle these markets today. So let's start with the headlines. Ukraine fears continue. It's not going away. The still markets very unsettled, very uneasy over developments in the Ukraine over the past 48 hours, multiple areas of concern. Germany agreed to send heavy weapons to Ukraine, and the wider increase in military support reinforcing fears over an escalation in the conflict, especially with more aggressive rhetoric from Russia continuing. Russia also announced that it was cutting off gas supplies to Poland and Bulgaria as the two countries refused to pay in rubles. The move increased concerns over a wider disruption of supplies to Germany and Italy. Global risk appetite slides again after securing a limited and brief recovery on turnaround Tuesday yesterday. Risk appetite deteriorated again during Tuesday with sharp losses seen across all equity markets. There were further concerns that global central banks would have to tighten policy aggressively to curb inflation. Don't know what good that's going to do, but that's what they're talking about, which will result in substantial tightening of financial conditions and increase the risk of increase the recession risk. Now, if we're talking about recession, I'd rather talk about depression because that's what it looks like it's heading towards. The slide was again led by the US tech sector with sharp losses for the Nasdaq index. All risk-sensitive assets were under pressure. Euro hitting a 5-year low. Ukraine concerns, obviously, the mainstay behind that. That's a significant negative factor for the euro. And euro dollar dipped to lows at 106.35. We're going to take a look at the charts in a second. Sterling also on the ropes. Confidence in the UK economy has continued to deteriorate, and sterling has also been damaged by the slide in global risk appetite. However, probably holding on to a little bit of favour there in the FTSE with a lot of dollar-denominated assets, with the dollar continuing to be the safe haven asset. And we got Australian inflation hits a 20-year high. Australian consumers' prices increased by 2.1%. Would love to have that over here. Underlying prices increased 3.7% over the year from 2.6. Data triggered increased expectations of Reserve Bank rate hike at next week's policy meeting. What good will it do? Bank of Japan policy meeting also on Thursday, and later on we have oil inventories. So be aware of all of those. So let's dive into the charts, and where shall I start? First of all, I've got WTI on this chart. This is a 4-hour chart in WTI. And I want to highlight, obviously, with the Ukraine Russia situation escalating further, doesn't look like we're going to get any resolve there anytime soon. And this is looking really precarious for an additional upside move. We have had this impulsive move higher, obviously the extension as the war has escalated, and now we've in this very volatile sideways pattern. We've formed this huge area of support down in the sort of like $92. This is WTI crude oil, $92 to $94. We've also got this trend line here. We've got 4 decent points. We've got a tentative trend line on downward trending. This forms a triangle formation, which has a bias to break to the upside. Because we've come from below, moving up, the bias is to break to the upside. So be aware of that. This is only a tentative downward trending resistance line because there's only 2 points to connect. A third point would make it a trend line. As you can see from the below, we've got 4, 5, 6 points that we can draw this trend line from. So we are upward trending. That's it for oil. Really, if we do get a break of this 109, 110 area, then the next extension would likely see a return to the recent highs, and maybe even heading back towards the all-time highs around about 150. So be aware of that, please. On the gold side of things, we have a formation going on, again, 4-hour chart, looking at really the intraday charts, we're in Wednesday, Wipeout Wednesday, I've called it today, just because of the turnaround we saw in the indices yesterday. We've had a little bit of a reprieve overnight, but we'll dive into those in a second. Gold still seems to be under a little bit of pressure. It's holding at support 1890 to 1895 for me. It's decent support. However, it doesn't look great. Escalation in the Russia-Ukraine situation should really sort of support this, but we've got dollar strength, which is having a negative impact on XAU USD, the gold against the dollar. So it looks like we're retesting this support level. Really 1890 breaks, further downside should be seen. Really looking to focus on maybe the 1850, 1860 as the next level of support. And we need to clear ground above 1910, 1915 to retarget the upside on gold move. Taking a look at FX, let's dive into there. We've got the euro dollar. Let's take a little bit look at the daily chart again. As we say, we're hitting euro hitting a 5-year low. And if we go back, let's get a weekly chart. Oh, well, we can see it on the daily. Here we go, all the way back here, 20th of March, 2020, the start of the pandemic, and we're down at those levels. Further downside feels like inevitable at the moment. Further downside would target an area around about 104. That would be the first, no, even lower than that, 103.40, 103.40 to 103.50, and that's levels we haven't seen since 2016. Going back a bit further, we're looking at just below there. We're looking at the one parity, basically. Euro against dollar would be parity. That would be the next major level to sort of see. Let's draw a nice little circle around there. Looking at that as a potential, but we can see the lower highs, this formation where we've tried to sort of like find a bit more support. It's failing, and a break below these levels, especially below the 103.40 level, and it could be a further aggressive move to the downside. Cable has performed better than the euro, but it's still under enormous pressure. We can see on the weekly chart, we're moving towards this 61.8 Fibonacci retracement level. This is the move from the March start of the pandemic to the highs above 143.45, and the retracement, a 61.8% retracement, which is a normal retracement in markets. So nothing really to shout out about yet. It's definitely performing better than the euro. So, but as we've seen over the last 2 weeks, breaking that 130 level, as we talked about, was key, and we've seen that extension lower. Dollar yen seemed to be no limit to the upside for dollar yen, although this week there has been a little bit of movement and yen trying to fight back, but we are above the previous swing high from 2015. 125.85. If we look at the weekly chart, next serious level we've got on the upside, 135. That doesn't look far away, and it doesn't look like it's beyond the realms of possibility. So watching out for that further upside again in dollar yen as this dollar streak continues. Nothing really slowing it down. Even on the 4-hour chart, it almost looks like a bullish flag forming. We can see this sideways to slightly downward trending correction, but if you imagine a flagpole, here we have the flag. Let's get that line drawn. There's the flagpole, further upside, pretty much like we saw back here in March. We saw the same sort of formation, this potential topping formation, looked like a head and shoulders formation, which failed. Let's get rid of that, and this would be the same. Looks a little bit head and shouldery, not quite, left shoulder not clear, but a flag formation nevertheless. Again, we could see that potential, and to check out the measured move of that, 135. Quite uncanny that it is actually at the next big level. So dollar yen looking to go further. Let's take a look at Nasdaq. Nasdaq definitely took a big hit yesterday. I had it on the gun to head trade idea. I'll try and find the chart which I posted it on. I posted it late on TradingView, unfortunately. Sorry about that. But if you watched the show in the morning, you would have seen it. But I thought I'd post it later on, just to give you an idea of what I talked about, and you can go back check it out. This continues to be under pressure, although we've had a nice little reprieve overnight from 11 o'clock last night. We've had this pullback, and it's not looking great still. We looks like resistance will be up at 13,100 to 13,230, and that should cap prices. And we're in for an additional fall if this negativity towards the indices continue. Let's take a look at Bitcoin. We had the turnaround on Bitcoin. This was from the 21st, and yesterday was a bearish outside candle, which looks pretty ominous as well. We've had a little bit of support come in this morning, but we're very close to the major support around about 37,500 level. A break below there, and we'll have, here we go. Let's draw a tentative trend line in. And again, make it tentative. We've got 2 points, 1, 2, hasn't quite touched the third. And so we will see here if this does hold or not. That has to hold for Bitcoin to remain buoyant. A break of there should open up a more targeted move towards the 35,000 level. But signs are good so far. This early turnaround, we can see a couple of bullish hammers formed. 1, 2, 3, 4, 5. Nice double bottom formed. Break of the double bottom. Should see a bit of an extension of the move higher. Let's take a look. That targets a move back to the 39,000 level. So not looking bad. Bit of a mixed bag really with Bitcoin. And yeah, let's see how that plays out today. Looking at any other indices, markets, crypto, comms, we've taken a look at all those, and yeah, pretty much that's the technical analysis that I've covered this morning. Hopefully we'll have a full team back tomorrow. We can dive into a few stocks as well, but in the meantime, let's take a look at what we are expecting today. Today, the day ahead is pretty much US crude oil inventories. That's at 3:30. Bank of Japan policy decision is overnight. That'll be 3 o'clock in the morning, so pretty early, a little bit too early for me. And the US Q1 GDP out tomorrow, and we'll see how our friends in the US are doing. Not going to really hold my breath for that either. So hopefully that's oh, gun to head. Let's do a gun to head trade idea. Why not? You're talking your book, Steve. What are you going to look for? I mean, I'm still negative on indices. This is my gun to head trade idea from yesterday. Let's take it back to here. So really looking at this head and shoulders formation, and this is how it played out. Nice, hit the target at before the close. Nice, 8 o'clock, hit the target on the nose. Nice 3-to-1 risk reward trade idea. So Steve could shout about that one for a little while, but can I follow it up with a similar type of idea? Now the real market I'm looking at as well is oil. Oil looks positive and looks likely to break this resistance at 102.40. We've seen this now nice bottoming pattern, decent volume over the last sort of 24 hours, and we've got oil inventories out later, so that will add definite some volatility to it, but looks likely to break this resistance on the upside. So let's get a buy trade idea out. We can make it a pretty decent risk reward trade idea as well. We can put the stop pretty close, and let's see, we're getting long at 101.87. Let's give it a little bit of room. I know how volatile this baby gets, and then let's look for a decent move on the upside. It might even be a bit more aggressive than that. Why not? We're going for a 4-to-1 risk reward, back up to these swing highs that we saw on the 18th of April, getting long here on WTI crude oil, and the stop we'll have at 137. Really volatile market, stock's pretty tight due to the volatility and everything, and let's see how that one plays out. So that's my gun to head. I'll post that shortly on the TradingView platform so you can see it and we mark it down. Okay, let's take a look at that's about it. That's covered everything from today. Thanks for joining me, and we'll speak to you again tomorrow.